Hey, what's up, y'all?
Just doing a quick update on my Webull and Robinhood account. I found this cool app called TraderSync, as you can see here. You just upload all your transactions and it compiles it for you and shows exactly how you've been performing. It's actually pretty good. So instead of just showing the Webull P&L, I'll start compiling it here. So if you guys are interested, I'll probably leave a link. I think they have some sort of referral, and then there's a 7-day free trial, so it's pretty neat. I like it so far, so I'm probably just gonna do like their basic plan where it's like 29 bucks a month, but I think I get 50% off if I upgrade before the trial is over. Well, anyways, I'm uploaded my data last night and just started going through it, and it's pretty accurate. So I decided to go with this. So um, right here, what you see is my account overview. As you can see up top, my Robinhood and Webull. I just filtered for those. I also uploaded for my other accounts as well, but I won't show that because this is what we're focusing on. So here's the transparent portfolio. As you can see, profit has $20,119. You can kind of flip through here. You can see my average profit is around $208 per trade. Average loser, $85 per trade, which is really good. You want to keep losses as small as possible. So, in addition to that, um, here my win percentage. I guess it's went down. I don't know over what time frame though. I'm not too familiar. I just started using this app, but wins 103, 85% win rates, 13% loss rates, 16 losses. Pretty. This is a I'm not tooting my horn, but this is actually a pretty good performing portfolio, right? And it all comes down to a few things here. First of all, is trading size. I'd say most of the time when I'm trading, I start out with I don't go in full size. I go in like half size, quarter size, right? And I let it play out, and then I'll add here and there. I'll add especially on dips, and let it work out for me that way. If the stock runs immediately after I get in, and if I'm only in half size or quarter size, it is what it is. You're still profiting. You're not in full size, but you know what? That's how you stay in this game by not chasing stocks and buying when the time is right. So yeah, that's pretty much. I mean, it's really simple. That's it. Watching trading size, uh, watching or trading strategies that I'm very familiar with. I'm not a guy that shorts stocks, so I never short, right? I only trade options. I sell premium. I'll buy debit spreads. I'll uh, I'll sell puts, right? As far as options goes, sometimes I'll long naked options, but I usually put a lot of time on them. So um, either way, I try to avoid the whole buying weekly options, right? Because they're so volatile and you have to trade them very quickly. You can't hold on to them more than a day. You should be trading those intraday, not holding until the end of the week, right? Because you have time decay. So it's very important to realize that. But yeah, just staying with what you know and what you're good at, right? You don't have to be good at everything. It's good to be familiar and understand different strategies and different products, right? Like futures, options, stock, right? It's very important to understand that. But in order to be successful in this game, you find what you're good at and just just use that to your advantage. That's your edge, right? Whatever it is. I mean, it could even be day trading options, weekly options. If that's your thing, stick to it. So I'm not bashing it on it at all, but a lot of new traders, they trade weekly options because they're cheap. So That's a terrible reason to trade them. All right, so continuing on from here on this overview, shows here I'm short 85% of the time, which I think it implies shorting options because that's what I do a lot. I short a lot of options, short a lot of premium, right, and collect premium over time. Long 70%. Um, I'm not really, these numbers, they don't add up to 100%, so I'm not even sure. I don't even know what this AFTN is, but I think the most important thing is to see the P&L here between the two Robinhood and Webull accounts. These were started with $5,200. So, I grew it to a profit of $20,119. I also added 3,000. So I'm around 28,000 right now, $28,000 in my portfolio total. You can see here daily P&L on the bottom, uh, up 4,192%. That's pretty interesting. All right, so we go here. It's kind of like we got different reports. We got the overview report, a weekday report, which shows my most profitable days to trade during the week. As you can see on Fridays, I might as well not even trade Fridays from here on out. I mean, that's what it's telling me. I've only made $800 uh, out of all the Fridays I've traded. So I might as well just cut it out of my trading plan, which I've been doing lately. I'll watch the open, but soon after I'm done I'm done trading within the first 15 minutes, right? Maybe I'll just look to sell, especially if it's like a nice gap up in the markets. I'll just take some profit and then just overlook my portfolio, make sure everything's good for the weekend, and that's it. I'm done. That's usually how my Fridays go. Mondays are, my prime days, so I got to concentrate more on those. And as far as the rest of the week, they're pretty good too. So setups, I think that's something you got to configure hourly. I guess the time of day. This is more like, I guess, if you're a day, probably for day traders, it's really good to know. Volume, showing how many shares I play usually. Uh, Stakes, I think you got a monthly profit. There it is right there. Price, I guess price of the stocks. So usually what I usually trade in this account, I guess not many too much higher above $20. But let's go back to the overview. You can see here, got a accumulated return, 20,119. Average return per trade, 159. That's what I'm assuming, or average return over time, I guess. Um, Biggest profit, $2,115. Average profit, $208. There's the average profit per trade. Uh, let's see, biggest loser, $300. Very important to keep your losers small if you want to last in this game. That's probably the most trading small and keeping your losses small. If you just concentrate on doing that and forget about everything else, you'll be successful. I guarantee it. You just let your other trades work out. Don't worry about profit potential or profit targets. Just take profits along the way. Keep your losers small. Trade small, right? I have to say that I don't go in full size a lot. So if that says something, it allows me, especially with these like SPAC names and smaller price stocks, it's very important to understand on a macro level, where these things can go if they go against you, right? So if you can last, if you can last through those dips and drawdowns with particular size, that's the size you need to stick with. All right, so very, very important. So, got my son in the background. He's eating. Uh, Average loser, 85. Profit loss ratio, 15.7 to 1. See, that's very important to have that high up there. Average daily P&L, $419. I don't know if that really applies to me. I don't really trade too actively on here. Let's see, number of shares traded. It should show how many trades I've had. on here. Maybe it's up top. Number of trades right there, 126 trades. Out of the whole, like since July of last year, I've only had 126 trades in these accounts. That means like you don't go in and out. You create a plan, right? You create a plan. You trade according to that plan. A lot of people do is they tend to they get into a trade. They have a plan, even if they have a plan, and then the plan doesn't work out immediately. So they get impatient and then they sell out. Nothing has changed with the stock. It's just it hasn't moved in their time frame or moved as quickly as they wanted to. So I'm sure a lot of you seen this. You get into a stock, you're like, okay, it's not moving. It's been a couple weeks, it's been a month, right? It's still not moving. All these other things are moving, you know, but it's still working according to my plan. It's just not doing anything right now. So you sell out, and then immediately after you sell out, next thing you know, it's running. It's moved, whatever percentage, right? And you're sitting there like, damn, if I would have just held, right? And then on the flip side of that, when you sell, and then you go and chase these other names, especially names that you're not familiar with, it's kind of like starting over. You have to understand the stock, understand how it trades. What if it doesn't go your way? You're chasing pumps, right? You buy the top, you stay, and you end up upside down in the trade, and then you sell those, and you're constantly, compounding those losses because you're impatient, and you're going in and out of trades, not sticking to your plan, right? In a way, sticking with your plan on one trade, even though if it doesn't work out right away, it prevents you from chasing these pumps and chasing other stock, right? And avoiding those losses as well to prevent that compounding loss. I hope that makes sense because it's very important, having patience and letting your plan play out, no matter what time frame. If you're a day trader, swing trader, long-term investor, it's very important to follow that plan. Once that plan gets negated or goes against you, and you're like, okay, this plan's been breached. It's not working. Yeah, then get out, right? Minimize that loss, right? You take that loss and you move on. But until that happens, you stick with the trade. No matter if it doesn't work like for a month, hell, if it doesn't work for 6 months. That's why it brings me to my next key subject, which is key takeaway, which is trading size, right? If you're in that trade for 6, all right, got caught up, got cut off there for a second, but just going back to what I was talking about, right? Trading size. When you trade size, your trading size is very important because, like I was saying, like if you're in a position for 6 months to a year, right? You're in that position that's not working, but at the same time hasn't breached your plan or caused you to stop out, right? Or give you a reason to stop out. Then what are you doing all in on that trade? That's the problem right there. That's the underlying problem, right? You're in too large. You're either in with half your account, your whole account. You don't have any money to play these other plays, so you have opportunity cost going down the drain. You're being too greedy, right? You're too greedy on this. You want this trade to work so bad, right? I guarantee you, once you're past this trade that you've been holding for a year, you'll forget about it after you sell in a week. Guarantee it. You're so tied up in this trade, you're wanting it to work. You're like, oh my God, I gotta stick with it. It's gonna work, but you're all in, right? Then it affects your performance as a trader. You can't you can't think right. You're not thinking straight. You're too focused on that trade, on that one trade, and you're letting all these other opportunities pass you by. And what's so special about that stock? Probably nothing. You probably never even heard of it 2 minutes before you got into that trade, right? You probably chased it or whatever. Hopefully you didn't. Hopefully you had a plan. But that's the thing. You're a lot of people. want to go all in and make it big, right, on one trade. And I totally get it. You have like $2,000, you have $5,000, you have even 10,000, right? You're like, I gotta grow it. I gotta, especially if you want to do this as a full-time deal. Um, I get it. You're trying to grow it. So right now you're like in capital growth mode, trying to grow your capital, right? So, I know it sounds counterintuitive, but the best way to do it is to lower your trading size. Go small, like a few percentage, a few percent of your account, right, in one trade. Even if it's like 50 shares on a $10 stock, 100 shares on a $2 stock, right? Just keep it small, right? Just keep it small because what you're doing is you're going to open yourself up to other opportunities to trade, right? You're going to be able to find those trades that are set up. You're going to find those trades that are that come around once in a while, but they're set up so perfectly that you're like, okay, this is the trade, right? I'm not chasing it. It's right at support, right? Or if you short, right at resistance. Here we go. My risk to reward ratio is very small. The risk is very small. So then that's when you size in, right? That's when you that's when you put your chips in on that trade, right? I'm not saying going all in or half your account, but maybe double your size, right? Double your size, triple your normal size, right? That's where you bank, right? So you just can't do that on every trade. You trade small until that opportunity comes, and then you hit it. And then the other side, you trade small, but then you hit a stock that like triples, quadruples, 5X's, like the Tiger trade I had, the TIGR. That was the best trade of 2021 so far. That thing got in at $7. It's almost 40 right now. I'm still in. I got a very small amount of shares now, but made a killing on that trade. I went into it, you know, you know, same as usual, same size. I didn't oversize, I didn't go in like triple size, right? I just played it small, and look what happened. Huge, huge trade, right? That's what you're looking for. They're not going to come around often, so that's why you trade small, because there's going to be a lot more losses or a lot more stocks that don't work immediately, to where you have to stay small to survive to get those big trades. So yeah, that's my little rant on trading size, because a lot of people don't get it, right. And then once you get to a certain level of account size, you'll feel your mindset change. You go into like a capital growth mode and more into capital preservation. That's key. And when you get to in a capital preservation mode, your trading becomes a lot more relaxed, right? You're a lot more relaxed on your trades. You're not like searching for the next pump. You're not trying to grow your capital as fast as possible. When you get to that point, you're like, okay, now I can just let my plans work. I can afford to be in a decent size on these trades, and no matter what it does, based on my plan and macro levels of whatever my plan is, I can hold it through that with no problem, no sweat, right? And when you get to that level of trading, you're gonna feel your trading really transform, and you're really gonna start. The money is really gonna start just coming in, right? Because you're calm. You're not focused on any one trade. You're not playing very risky strategies anymore, because you go into this capital preservation mode. So, most traders, they just don't make it out of that capital growth mode. They try to YOLO, they try to grow it as fast as possible. And I get it. I've been there. I've blown up a few accounts. It sucks, but I persevered. And finally, when it works and you understand, like, look, you can't be doing this shit, right? Like it just doesn't work in the long term. And I know some of you, are stuck in that, right? Like, you take 2 steps forward, 5 steps back, right? And you're like, ah, why can't it? I'm almost at 25,000. I'm gonna get over that PDT hump, that pattern day trade, right? And you're like, oh, I gotta work towards that. And then that puts a mental, that's like an obstacle, right? And it fucks with you mentally. So, you know, as far as that's concerned, it's just try not to think about it. Stay small, especially when you get like right at 24,000. I know that feeling. You get very, you're like very, that anxiety kicks in. You're like, oh, I'm just right there. Can I get over it? Then you get over it for like an hour. You're over 25K, and then you're right back below, right over, right below. And then you make a stupid play because you're like, I just need to hit 30K to get over it. And then you drop down to 15 and you're like, fuck, what am I doing? Right? Like, what the hell am I doing? Right? And then the cycle repeats. You get back up to that level, takes months, right? A year, you finally get back to 25K, and then you make that stupid mistake again. Then it repeats, cycles, right? And I guarantee it's either your size, you're not following your process, right? You're taking a risky gamble. You're just gambling at that point, you know, trying to get over that hump. But I guarantee if you just stay small, follow your process, watch your sizing, save capital for other plays, I guarantee it'll just compound over time. So I hope this Webull and Robinhood portfolio really just shows how you can take a small amount of money and just grow it. I started this in July. I actually didn't really start this challenge until September. When I opened the Webull account. When I opened the Robinhood, I was trying out a different strategy, which wasn't viable. It was just selling cheap options to collect $5 to $10 of premium per week. But there was just a ton of risk associated with it. So it was a lot of swings of volatility. Not only that, but it took way too much time to manage. It was more of a headache than it was worth. So I trashed the idea, and then I opened the Webull account. I threw $2,500 in there because I wanted to try out the platform. Now I'm like, you know what? Let me just let me show people how to do this and grow it, right? So I took the Robinhood Webull, you know, $5,200, and here we are. We're almost at 30K, right? From September, within a few months. I mean, it's been a hell of a bull market, but if you're not making money in this market, you're doing something wrong. This is the I have to say this is the easiest market to make money in. The hard part is when this market is over and you're trying to make money. This is not going to last forever. So you chasing pumps, chasing pumps is working. You see something running, it's up 100%, 200%, you jump in, you're making money still, right? That's the market we're in. So just understand that when that ends, so so will that strategy that strategy needs to end as well, and then you just conform to the next market, you adapt and evolve, right? So that's why it's very important to have a process. Don't oversize. you know I know you're trying to make it, grow your accounts, I get it, but just accept the fact that you're in capital growth mode and just keep your risk in check. So hopefully that helps. If you have any questions, leave them below. Thanks.